Good morning, everybody. Welcome to the Flow Show. Funny how sometimes you know just exactly what people get up to. I was commenting earlier in our chat room about some Bloomberg stories and how it's a bit quiet and they're struggling for headlines. And I said, watch out for some sources pieces to drop for them to try and justify their $2,500 fee per month. And they've just dropped a sources piece on the Bank of Japan saying that they might look to up their CPI forecasts potentially at the next meeting. So there we go. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, everybody. Yeah, I'm doing all right, mate. Doing all right. Watching the show, having the popcorn, and yeah, just watching what's going on in these markets.
Yeah, very much so. And that headline's given dollar yen a little knock on the head, a few pips as it wants to do. There we go. So yeah, exerting their what should we call it? Their authority on the market, shall we say? Their ability to move markets with a piece out of thin air. We'll see whether that comes to pass anyway. Right. Let's crack on and get stuck into things. We're going to start over in Japan. Ueda was speaking before the bosses overnight. Says Japan's economy is showing some weakness, but recovering moderately. Says we must watch FX and market developments and their impact on the economy and prices. He said if FX moves have an impact on the economy and prices in a way that's hard to ignore, we will, of course, respond with monetary policy. So a lot of FX talk now at the BOJ, as we know, since they brought rates to zero. They've been talking about FX being a big watch point for them as well now, and they'll be watching 152 as much as the rest of us. We had a little bit of data out from Japan, machine tool orders coming in a bit soggy again, down 8.5% versus minus 8% previously. That's one area that Ueda will be remarking on in showing weakness. The manufacturing side of things still looking very soggy over there as well. There's not been an awful lot of stuff out. There's been no real data out this morning in Europe. Bit of trade balance data there for France, but otherwise it's been fairly quiet. So we'll get straight into the US stuff. The New York Fed out with their seaweed, shall we call it, seaweed forecast for economy and inflation. They say for the third consecutive month, the 1 year inflation expectations remained unchanged at 3% in March. However, 3 years ahead, inflation expectations increased to 2.9% from 2.7%, although the 5 year inflation expectations went the other way, 2.6 from 2.9%. But those nearer term inflation expectations rising will be of concern to the Fed. And obviously we've got CPI coming up. Fed Goolsbee, I don't know if he had a little slap on the wrists from Powell, but he was a little less hawkish in some comments last night. Says the economy remains strong and the jobs data confirms this, and says the Fed must determine how long to be restrictive on monetary policy. Says the economy is getting back into better balance. No repeat of his comment saying that it may come to a point where the Fed may not have to hike at all. Cut at all. Fed's Kashkari, he was just talking about the jobs market, said the labour market is no longer red hot, but still tight. JP Morgan CEO Jamie Dimon says that the UK economy is still resilient and consumers are still spending. Markets currently expect a soft landing economy fueled by government deficit spending and past stimulus, and that inflation may be stickier and rates higher than expected. Didn't note on the consumers still spending. I'm not sure what they're spending on because the last few couple of retail sales numbers haven't been overly great. Also been highlighting that there's a current state of play for the Fed and the the cut landscape. Fed fund futures yesterday for December saw that the market now expecting only around 60 basis points in cuts this year. It was 150 basis points and had been higher than that coming into the start of 2024. 25 pip cut in the June meeting is now less than 50%. It's 49%. 49%. And that's down from 57% a week ago. That's according to the CME Watch data watch, what they call it, Fed Watch. Citigroup been talking about the ECB. They now expect the ECB to give us 4 25 pip cuts by year end. They were previously forecasting 5, so they've had the Tipex out. On the oil front, Mexico is going to be cutting at least 330 barrels per day of crude exports in May, according to Reuters sources. They say cuts could be up to 10 to 14 million barrels as production has fallen to a 45-year low. Geopolitics, excuse me, the Kremlin has said that a possible NATO base in Lithuania could escalate tensions. That's still ongoing. Israeli PM Netanyahu says that a date has been set for a Rafah invasion. Now, this might be something because a lot of other countries have warned Israel against taking such action. Whether this is just a bit of jaw boning to get a deal done on hostages and whatnot, I don't know. But Israel is saying that a date has been set for that invasion. The US has said that they've had no notice about that date. So all part and parcel of what's going on between the US, what's going on in Gaza, and obviously keeping an eye on what's happening with Iran as well. That's all I've got on the headlines. It's been a quiet day or two. Kay, got anything swung by your radar?
Really been extremely quiet. No, I really haven't seen much. People talking about the earnings season about to start. Stickier yields, stickier rates should be okay for the banking sector, but then other stuff is probably less good for corporates or so. No, not really. The Japanese officials comment a lot, right? And not only Suzuki, but Ueda as well is repeatedly talking about FX. And although, I mean, the base case is for them to continue to hike in Q3 or second half of their fiscal year, so from September or so onwards. But I don't know. I mean, if we get this continued strength in the dollar, and it's probably nothing with to do with this month, but I'm starting to think we should be somewhere at least take into account the possibility that they hike a bit sooner than what the global expectations are. Especially if, as I said, if we stay weak in the yen, because it is a pretty decent scenario for them. If you look, dollar yen has been very stable, but hanging towards those highs, and the yen crosses are in general also moving higher again. I think we may need to take it into account, that is something I was thinking about this morning, and I'm not saying I'm going to buy yen on the back of it, but there may just be that little bit of speculation coming into what do we have, like the 26th or so of this month. Yeah, the 26th. We are still like a good 2 weeks away. But I wouldn't actually be surprised to see a little bit of speculation ahead of what Ueda and his pals may say in the next Bank of Japan meeting. So I don't know. There's perhaps something brewing there. That's what I was thinking about this morning.
Yeah. So you think they may be stepping up? I saw you put that piece in the newsroom saying just as much as well. So you think there may be an early hike coming in, do you?
I wouldn't dismiss the possibility. I wouldn't dismiss the possibility. It's especially that the way that he's talking about the yen in most of his interventions in the diet and everything now. They're talking about it, so it's something that I'm just going to keep an eye on.
Yeah.
If only if they only hike their inflation expectations and not do nothing for the rest, and because he at the same time he's also saying that they will keep the monetary policy ample and what's the term, like yeah, on the low side, but I don't know. It's something that I'm starting to think about. Yeah, they could actually use the yen level if it stays here, and if the yen stays low, they could actually use it as an excuse to raise rates a bit earlier than what the market may expect, and that makes this April meeting interesting again, I would say.
Yeah, very much so. I mean, the precursor to moving or ending negative rates was those hikes in inflation forecasts the first time round. So them doing it again, as you say, may lay the groundwork. But I think the data's got to do a hell of a lot more than it is now before they start hiking again. But as you say, it's the progress. If they see the progress, that may get them moving on it. So we shall see. We shall see. Right, not a lot. Excuse me, voice is going now. Not a lot
What's
coming
happening?
up.
You catch a cold?
Yeah, caught. We've all got it here in the Little Stone household. So probably that trip to London, walking around the museum with thousands of people, lots of lurgies walking about. Anyway, we shall work. Life goes on. The world keeps turning, but yeah, I was saying not not a lot of data on the list today, so it's going to potentially be another quiet one. We're all going to be sitting watching whether dollar yen can break 152 again. If Bloomberg are to be believed, that's pushed the wolves from the door for the next 5 minutes. As you can see, we keep tapping up here, keep having a go, but it's not breaking just yet. One pair we'll have a look at quickly, dollar mex. That one is well on its way, seemingly unstoppable at the moment. It just keeps breaking down and breaking down. These couple of levels here go back to 2015. So you got to go way, way back to see those. There you go. Just that area of price action that we got back there on the month. Noted in our chat room, we are just getting towards the 200 monthly moving average, 1623. So that might be somewhere where we see a bit of support coming in. Otherwise, it's the fib, and then down at 1560s is the next area for me of support. So this one non-stop, K.
Yep, can't keep a good currency down, mate, and especially not when it's interest rates are at 11%. Yeah, I'm still a bit short Euromex. It's just it don't change a don't change a winning team, I would say. It's just there's still friendshoring, nearshoring. The nervosity around the walls and stuff is probably going to be ignored, at least by the markets, for as long as the elections are not ahead of us. Yeah, there's not a lot else to say. The Mex is still one of the best out there, and now it's getting a bit of help as well from risk, a bit of help from the commodity sphere. It's got a lot of help from many angles, and yeah, as you're showing there, we're having the CPI out today. It's actually the headline expected to rebound slightly. The other one to remain sticky. Yeah, it's not something that is unless we come out really far from expectations. It's not going to change, right? And when when uh, when nothing else is moving and volatility is very low, as I've been saying already a couple of times. When volatility, sorry, is very low, it's traditionally pretty good for the high yielders as well. So it's the MEX still has a lot going for it, you know. I must say I didn't think dollar mix was going to go that fast, especially not seeing the nervosity that there is over there about the migration situation and everything. But yeah, it's really dropping very fast, and yeah, I've only got my next levels are as well just around here, and then starting to talk about below 16. And on the Euromex is about the same, talking about 16 and 1650, 60 or so. I showed this morning in the room again. Could be there, and if the ECB starts to confirm June and yeah, it's just the the most logic and the softer side still the path of least resistance is not to go against high yielders which are still enjoying nearshoring and friendshoring. That's
Yeah.
just the same thing. It's been going on. It's been going on for since after the pandemic, really. So
Yeah, this seems
after
one where
4-year decline, huh?
yeah, this seems one that the fundamentals really shaping up in favour of the mix. You know, like you said, you know, oil prices now rising, kicking up a bit further. That's helping
Mm.
the mix as well. The fact that it's become the biggest trade partner for the US helping the mix. So, you know, even though they may be entering their cut cycle or they're getting back to normal cycle, it's still beneficial for the currency. So, like you say a lot, just because the country's cutting rates doesn't mean it means a weaker currency. Same for if inflation goes up, doesn't necessarily mean a stronger currency. The fundamentals come in and they take over. I
And
think that's
also, you know, it's if imagine they cut it's on. I think that from the monetary policy side, it's only if if and when they are going to cut by 50 BPs at one time, you know, each time, then it's
yeah,
really the case of okay, now we need to be a bit careful because if they're really gonna go on a 50 BP per not per meeting but each time cutting, then the interest rate differentials are over time going to be coming down relatively rapidly, and then we need to be a bit careful. But even if imagine that they cut 4 times 25 BPs over the next 5-6 meetings or so, I mean they're still going to be at 10%.
yeah,
But I think the second half of this year, going into the US elections, that's where we may see a bit more volatility, i.e., not one-way ticket stronger in the mix. Because we have
yeah,
seen, when was it, like February or so, early February, yeah, 9th or 14th or so of February, when Trump gained those first partial elections or the GOP elections, the reaction that there was in the mix, the session afterwards and a couple of sessions afterwards, that is something that we just need to bear in mind going into the US elections, and so that's where I expect a bit more volatility, but that is still, what is it, 6 months away, 7 months away.
yeah,
I mean,
yeah. I think we said it some months ago that probably the biggest risk to the mix is Trump presidency.
yeah,
But
yeah,
it
it's
might be
Trump,
just
but
ignoring
then
it. Yeah,
and as I've already been saying, you are on the opposite of the spectrum versus the yen, where we know the Bank of Japan is going to raise rates, but it's going to be so slow that it's virtually not impossible. Of course, I mean, if they intervene, you're going to make 4 big figures on if you're long yen, but if they don't, and if they don't change anything in April, if they because I mean, reviewing your inflation higher, but not changing anything to interest rates, I mean, what is it going to do? It's going to put your JGB yields 2 or 3 BPs higher, and that's it. I mean, you can hardly stay long yen for the next 3 months because they're going to pay a fortune away in funding, and the mix is on the opposite side of the spectrum. And also, what I think, what can support the mix right now, is that S&P has cut rates. The yields in Switzerland are coming off. I mean, it may be another currency pair that joined the party, and another reason why the mix is so strong, because you're looking at the S&P cutting rates, so the Swiss franc getting a bit weaker. Well, we have another carry trade coming into play now. So part of what we see in the mix now could actually be mix against the Swiss franc, and so it's still adding to the fun. And that's, the Swiss has never been big. When people talk about people doing carry trades and stuff, okay, the MEX is one of the currencies that has been the most popular in the carry trades. But per currency pair, if you look at MEX yen, Euro MEX, MEX Swiss now, if I take that example, it's never going to be a big percentage of an asset manager's portfolio. But if they can take free money on a carry trade, they are not going to let it just there and not participate. They will participate in a certain way. And I think that is what the mix is enjoying right now as well, is that you've got another currency joining the party where you can do a bit of carry trade against.
Yeah, very much so. It's been part and parcel of this one. It's nice to sit, nice to sit in a trade where you're earning money while being in it.
Yeah, I mean, that's what I've been saying for the past 3 years, really, when I started to buy mix. I mean, this is like somewhere an ideal situation. Yeah, and especially the mix is also benefiting from as I said, from the fact that a lot of people went out of China and went into Mexico. So the proximity to the US as an exporter to the US has increased dramatically as well. So I mean, that's the thing. I mean, where the MEX is enjoying more of a carry status than, for instance, the rand, is because of the proximity to the US as well.
Yeah, very much so. Ali, you're asking this question again about dollar weakness, dollar strength, and I think you sometimes you want too much out of a market in terms of where it's at and what it's doing. And I asked this question yesterday of you. Don't know if you saw it. What level should the dollar be at if you think it's not strong enough compared to data? You always have to factor in context, time, what the market is expecting. We've come through meetings, Feds, ECBs, data, NFPs, inflation reports, PMIs. Okay, the wider context is that central banks are going to be cutting because they want rates to get back to a normal level. Okay, they're not going to be cutting down to zero. We're not getting QE. There is no reason for anyone's currency to weaken significantly, nor anyone's currency to strengthen significantly. So that's why we get this ranging. You look at a chart here, 2023, we've been in a 400 pip range in euro dollar, for over a year now. That's because the market knows what's coming. So you have to take your strength weakness question in context of the general market and its view on central banks and whatnot. Not every data point is going to bring you a 200 pip move. You'd be lucky to get 40 pip move at the moment, depending on the size of it. Volatility is a big point as well. We've been talking about that. But I just think you want a bit more than the market's going to give you, Ali. Okay, I'm going to hand it over to you, mate, because my voice is going to go.
Yeah, I mean, what's going on there? I'm going to have a look at what's coming up and what. Just put this one.
Hand it over. There you go. All yours, mate. All yours.
Yeah. Okay. Just let me know if you want to intervene.
Yeah, I'm just going to go grab a water or something quickly.
Yeah. Okay, mate. Yeah. So what's on the docket for the rest of the day? We already said. So we've got the here. So talking about these makes, we have the CPI upcoming. So that's one thing. We do have minor reports here in the out of the US. We have to also take into account we do have a pretty well-packed auction week. By the US Treasury is auctioning quite a few bonds this week, although we haven't really seen too much of an impact on the yield so far. And we also have the vice chairman of the SMB, Schlegel, speaking this afternoon. I'm going to have a quick look. What do we? Oh yes, we have the next night for us. That's 3 a.m. London time, 2 a.m. GMT. We have the RBNZ coming up. Well, 100% of the analysts think that they are going to keep the rates at 5.5%. It is supposed to be globally a transition month this month for what are the for what the central banks are concerned. But I think a lot will depend on the tone. And as I've already been saying, Orr has been a bit flip-flopping, and his latest comments were, I'd say, a little bit back more onto the dovish side. Well, base case is at 95%, they don't do anything. But there is always a non-zero percentage chance that actually they may do something. RBNZ was one of the first to hike as well in this cycle. So we could see a bit of hints that they are closing in on a decision. And I'm just looking, they do have, in about a month's time in May, they will be one of the first ones as well to come up with something. So they may be hinting at going a bit ahead of the rest, because the numbers have been, I'm not going to say bad, but they have been average. They really have been average of late. So I'd say that there is perhaps a slight possibility that Orr is erring on the soft side, okay? And then for those who are watching Scandis, we will have Swedish industrial production tomorrow. They're doing pretty well, the Scandinavian currencies of late. We will have the Norwegian CPI coming up as well, expected to come off. And then we will have, is it global retail sales tomorrow day? No, okay. And then tomorrow, of course, we will have the US CPI as well. So that for what is on the program. Now, let's look at a few things here on the rate side. We have seen the move higher, and it's sufficient to come back under the break level here. We're just below, trading 439 on the US 10s for the dollar to lose a bit of steam. We're seeing it globally in the dollar this morning. So that means we are still hanging on to whatever happens over here is directing the dollar moves as well. And then on the 2-year as well is coming back to where we are, and this is what Ryan was talking about on the CME watch, and I'm actually happy that they are rather watching at this thing than rather the anticipation or whatever the ping pong may do on in the bond market, because the bond market looks to be overshooting all those expectations or under or overshooting this. So this is rather where we are now, and this is. So if you take the midpoint of the Fed funds for 437.5, right, 537.5 right now, and you subtract those 60 BPs, this is where your 2.5 cuts are. So that is the uncertainty where we are in right now. it's actually quite funny that over the last rise in all those yields, that the dollar did not really enjoy much of it. Okay, so that's quite interesting. Some people are actually wondering why the dollar is not making much more of an advance, but I think a lot has to do with just overall volatility, a bit of positioning as well. What we saw in stuff like Swiss had been correcting, and then when it's risk on, when it's risk on, the dollar tends to slip a little bit, and then low yielders also feeling a bit of downward pressure. Stuff like the yen, Swiss remaining on the defensive as well. Right, dollar yen, nothing's changing here. On the shorter end, I've got something around 153 and 154 as well. I think if we at one stage, there's going to be for tomorrow overshoot the CPI. If it remains too sticky, I reckon we take out the 152, but then the intervention risk, in my opinion, is really going to be there. Because even Ueda talking about the effects, as I said, is making me just a tad nervous. So I'm still running my option. I'm still running half of it on the dollar yen call. So for me, it can go up. But if we really see that spike higher, I'm going to at least hedge my option, and perhaps even if we see a real big spike higher, even try a bit of cash short for a possible intervention play or so. That yeah, I needed to clean up my books, mate, Bran, at one stage. But what's happening in the yen crosses is, again, telling it's not only the dollar yen that is hanging up around lofty levels. It is all those yen crosses again, and that's where I also think that makes the Japanese officials quite nervous. We are creeping back towards the 165.30s, where the prior high was in the euro yen. If you look at stuff like Aussie yen, remember there was this like really long term trend line. We are now testing it again. Those are really lofty levels, and one could say without intervention, this is not going to change, and we can continue actually to go higher. But a lot will depend upon the speed, of course, of all these moves. But there's really not a lot of stopping this right now. Okay, Kiwi perhaps a little less buoyant, but it's showing the same moves higher. But I wanted to show one, and here, yeah, this one I'm watching as well, because it's starting to come back to levels from where we had. Was it not the sterling yen? I thought there was something in sterling yen happening. Oh, was it this one in the shorter term? It's also trying to again break out what we started to do in this correction phase. It's looking to break out again. We're above 192.5 where right now. So this could just continue to go as well in the sterling yen. So we see all those yen pairs are still very big. That means the market is still selling yen. I think rightfully so. Without the intervention threat, there is really not too much of reason to be long yen, as I said. But the Japanese officials talking every day about it, they will see all those moves, and they will see the relative strength of the yen really collapsing day by day, and making them very nervous. So I do think that if tomorrow there is an overshoot on the CPI and dollar yen goes for a walk, there is a real intervention risk tomorrow, I would say. Euro dollar quickly, still the same levels. It's coming back relatively easy to those levels. I wouldn't think there was too much of a reason to really start to buy euro, but I also think that those little green shoots we were talking about is keeping the euro up right now, and perhaps a bit of positioning as well. We are there's really nothing data-wise that are going to tell us that we are going for break. So I would expect a little bit of resistance around this 108.75, but I would also equally not exclude, because the market looks a bit long dollars, looks a bit short the rest. I wouldn't exclude that we go for a walk before the ECB, before the US CPI up into those low 119s on the euro, okay? And there, I don't see too much reason for it to go anywhere, but I think there is far enough if we get up there for the euro dollar right now. Cable, exactly the same thing. Moving up, and we are getting into a bit of resistance here, 126.90 already here. The last week Thursday spike around 126.80. We are trading bang on it. So if it goes, I think we can perhaps push a little bit. But then here, I think anywhere between 127.20 and 40, that should be okay. That should be enough for now. Sterling is actually getting a little push right now, and I also think that's all right, because we've had, and I don't think we showed that. Where is it? Let me find those the economic calendar back. This one here was pretty decent. The retail sales that came out for March were pretty decent this morning, so that can be behind the sterling strength of the morning as well. So I think it's all a bit justified right now. What else? Ryan already showed the dollar mix. I have a bit of levels there as well. I think euro mix is also on interesting levels here. This is coming back from 2013 lows, but obviously we have broken, right? We have broken down. If you look at here, 1805, that was a decent zone, even a bit higher. We have broken down on the long term as well. But this is a bit of an interesting zone here. We are in around 1770. That's where we are right now. And then we're coming back to exactly where those dollar mix levels are as well, 2015 levels, 17 and a half. But then if you go back all the way to the lows on the post global financial crisis, 1660s, 16 and a half, 1660s. That is where I think ultimately this could end up if Banxico is not getting all of a sudden more dovish. It could be still a very medium-term play, because that's still like one full 100, one Mexican peso, if you want to express it that way, lower. It's 5%, 6%. In an emerging market, that is something that could be done. We have done it since October as well until now. So that can be done over the next months, I would say.
Have you looked at dollar CAD yet, mate?
Tell me.
Have you looked at dollar CAD?
Not yet.
Not yet. Okay.
Do you want to take a look at it, or shall I?
No, keep it on the screen for a while. I'm getting. We were speaking about this in.
Yes.
It's getting down.
Are you interested to already step in here, or are we waiting for here 135.30s? I'm okay too, because the rest of the dollars look a little on the opposite side right now. I'm actually to wait around here.
I'm in two minds whether to start around 35.50, just picking it up. I might just scale it in some smalls, do some at 50, do some at the fib, do some into 135 if seen. And I'm not going to go the whole trade at one level. I don't think.
For those who were not with us, we were talking already about the Canada yesterday, and we both agreed that Bank of Canada may be tempted to start to err on the more dovish side, but that's for tomorrow as well, right? Tomorrow, right? With Bank of Canada.
Yeah. And
so and now with the dollar coming back off, it may give us a bit of opportunities for us at least, looking at this, to perhaps build like just a small one to test if we are right in our opinion about them starting to be a bit more dovish. So this setback that we saw, and yes, Ali, it again failed above 136. But then if you look at it, we it's still in an upside wedge, right? So I still think that there is also a possibility that we find some support. If we get some more downside here, that would, I reckon, give a little bit of of an opportunity to try. But I'm also looking at stuff like this, and unfortunately, it's already done a fair bit. But EuroCAD could be one that if we get a bit of a setback here, but I'll be looking at it. It should at least come back down like 50, 60 points before I get interested. And then yesterday and this is one that I think I haven't traded in 10 years. I haven't traded Aussie CAD. But then I was looking at the Aussie doing slightly better, and I said, like, why not? You know, with copper going higher, why not? And then I'm looked at this yesterday and saw like, oh, this already breaking, and I'm afraid we are not going to get a retest back of the low 89s, because I think this could be perhaps one, if the commodities continue to go higher, that could eliminate a bit of a bit of dollar also risk if the dollar remains weaker, and if you want to eliminate some dollar risk, and this could be a pair where I'm getting interested in. If ever we get like a 50, 60 point setback here, I may give it a try on this Aussie CAD, because this looks like a bit breaky to me as well, to go higher. So this is what I'm going to keep a close eye on, and I've only done the daily. I haven't done anything closer or tighter than that to see if there is a decent level, but as I said already, perhaps like 40, 50 points lower. This is one that I may give a little try as well on
Do
the
you think?
CAD.
Do you think the Aussies finally reacting to this move in gold?
Aussie?
Yeah, because you know Aussie's obviously a big gold currency as
Yeah, I
well.
know. I think
And it's
for one, I think the rand is starting to react to it.
yeah,
The dollar rand is coming off, and with risk seemingly doing okay despite the geopolitical, the dollar rand is one that is now reacting to the gold. But yeah, I mean, Aussie is one. But again, it's a correlation that has been completely gone for quite a while. But it could, yeah. Those
it
correlations
feels like
it comes
it feels
back.
like it
Aussie is
can't
one. If
ignore
you
it
look at the
anymore.
Euro Aussie, for instance, it's coming off. Despite Euro
Yeah,
going up, Euro Aussie is coming off. Aussie is doing pretty well.
yeah. As I say, it's almost as if it can't ignore the gold move anymore. You know, it's
Yeah,
done. You know, good what $600 this year, or just before this year, and you know, it's you can't ignore that. You know, if you go
no,
back to late last year, we were down,
yeah,
or just before the turn of the year, down at 1800. You know, it's done a hell of a lot,
yeah, yeah,
and
yeah,
you don't usually get $600 moves that the currencies ignore.
yeah, yeah. That's true. That's true. Yeah, gold. We had that little bit of a setback. I mean, usually on a Monday morning, we may see this kind of thing, and then we got this setback, which we had, and that was a pretty serious setback, even like over $30. But it's already undone. We're already going higher, and as I said, this we are in uncharted territory, so we can only look at extension levels also. Um, and we are turning, well, already above this one, and the next one is only at 2390. Where that's going to end up, I don't know. And I've read articles. I mean, people are really fishing at. I mean, it's probably a mix of everything: central banks, FOMO, anticipation of lower yields, geopolitics, you name it and you name it. It's probably a mix of everything. But yeah, okay, the geopolitical risk is not really abating, and I think, as we said yesterday, there is a bit of a risk, I think, for the next 24, 48 hours regarding Iran, because it's the end of Ramadan, and let's hope not. but it may be a risk situation for the next 24, 48 hours in geopulse, and that may again push this gold to fresh highs as well. And silver is really following this time as well. The rest of the commodity sphere is going up as well. So silver is following as well, but I'm also thinking of I mean the next half a buck in silver, I'm going to start to manage a little bit more of my long-term position around this 2860s. If there's not more stress coming in from the geopolitical side, also I'm going to manage a little bit more. What else? But yeah, I mean, okay, yes, back to this Canadian dollar. Yeah, I think if as we were saying, if the Bank of Canada goes a little bit on the mellow side, and I think there's risk there, this could actually retest up in the 136s. But as I also said, I'd like, and I also always like to look at crosses, because the dollar is something that people trade very much. It's the most traded pairs. But since the US and Canada are neighbors, it's perhaps not always the best pair to be in a dollar pair. So and the dollar is also sometimes in crosses you get sometimes more smooth moves, because dollar pairs tend to move a bit together in all pairs, and so the cross side is sometimes a little bit smoother as well. And a little bit more clear than a dollar pair. Okay, Aussie Kiwi is one that's going to move on the RBNZ, and so watch this 109.70, 70.80, guys, and 109.70.80. If ore is going any more dovish, I think we may be in for a move up into the 110s. Okay, everything same, neutral, whatever. I think in turn this may be a decent resistance area for a move, perhaps back into the mid 108s. But if they go dovish, and if we even have a surprise that they are the first cutting 25 BPs, then we are trading well into the 110s and even perhaps 111 on this one. All right. Michael, managing more is closing some of my longs. I'm long-term long on silver. I've been managing this for years, really years. I started actually to buy around here, but I've been adding on dips and then letting some go on rallies, and then I still keep my long-term long, but I think I always like to manage it a little bit, so I create room in the book in case of a setback to be able to add again. Okay, this is how I trade, and that's it for me for today. Yeah.
Thank you very much, mate. I'll just grab it back quickly before we close up shop. Let's get the right screen first. That will help. Yeah, just to finally make you aware of the new feature we've got at ForexAnalytix, mentorship, one-on-one mentorship that we opened up last Friday. We've got a new site there. I shall put the link in the chat for you, so you can grab that there. Do check it out. Most of the team offering their services on here as well. If you want to get some good one-on-one mentoring with us, any of the coaches here, any of the team at ForexAnalytix, check that out if it will help your trading. We do have a special offer on that's only going to be running till tomorrow, close of business tomorrow, and then that offer will disappear. I know there's very few slots available at the moment, so get that checked out. And on that note, before my voice goes again, we shall call that a day. Do trade safe, folks. Have a good one. Thank you very much, Kay. And we shall see you all tomorrow. And yeah, hopefully my voice will be a bit better. Thank you very much, everybody. Cheers.